Hi, Thomas Brinsko here, publisher of BIC Magazine and BICmagazine.com. Yesterday, the price of West Texas Intermediate oil slid below $85 a barrel, losing 3.5%. Now, I usually don't pay a lot of attention to short-term movements in commodity prices, but when I do notice the price of oil moving around, I ask the natural question, why? Well, reported reasons focus primarily on China's economy slowing as COVID outbreaks flared, and OPEC also released its global demand forecast, which it revised downward for next year. So the reporting focused mostly on demand issues. Pricing is always a function of supply and demand, and while there are a lot of mixed signals in the market, I personally am really bullish on oil, and I'm going to share 5 reasons with you why I'm bullish. But first, a word on yesterday's OPEC numbers. Yes, similar to the International Energy Administration, yesterday's OPEC report suggests a weakening of 2023 demand. But guess what? It's still 2.2 million barrels per day more in consumption predicted for 23 than 22. So OPEC forecasts oil demand to grow only by 2.2 million barrels? Really? Why are so few people asking the obvious question, where are the incremental barrels going to come from in 2023? Also, I think the headwinds of 22 become tailwinds in 23 for pricing. This year demand has been tampered by COVID's lockdowns in China especially. This won't last forever. China signaled it will loosen its restrictions. China unshackling itself from COVID zero policy will certainly increase demand. Also, the Strategic Petroleum Reserve ending its release policy will turn a headwind into a tailwind. Eventually, Biden will have to stop releasing oil from the SPR. Whether you agree or not with his policy, which most industry doesn't, the administration is going to have to keep at least some of our strategic inventory for a real emergency, right? And he's promising to refill it. Crude oil released from the SPR was about 4 million barrels last week. They've released over 200 million barrels this year. Stopping the continuous release and instead buying oil from the open market to refill the reserve will be an obvious impact on supply and demand. Another headwind on pricing that will turn around next year are the DUCs in the United States. Now, we've reported on DUCs or DUCs as the other strategic reserve. DUCs are drilled but uncompleted wells. Investment in drilling has been way down this year as companies have focused on returning value to shareholders and repairing balance sheets by paying off debt instead of plowing money back into operations. But production in shale plays is up this year despite less investment. Why? It's because companies have been completing the previously drilled wells and selling the oil. The number of DUCs has been declining as they are used to keep up production levels while not incurring the expense of drilling more wells. It's also worth noting that not all DUCs are created equal. I've read that DUCs that are more than a year or two old are much less productive. And I don't have the data to back me up, but common sense tells me that exploration companies have probably targeted their best DUCs first to improve their bottom line. So the DUCs depletion inventory is problematic because a steady supply is needed to maintain and grow production levels and offset production declines from existing wells. I note again that OPEC demand forecast for 23 is greater than 22, 24 greater than 23, and 25 greater than 24. Similarly, Phillips 66 global oil demand outlook is expected to grow by 7 million barrels per day over the next decade. One more point, OPEC missed its October 2022 production quota by 3.3 million barrels per day according to third-party surveys. This is the 20th consecutive month that OPEC Plus has missed its production targets. So, 5 things. OPEC isn't hitting its production quotas. Biden is promising no more drilling. The U.S. will have to taper off its use of DUCs. We're going to have to taper off our use of the Strategic Petroleum Reserve, which artificially puts more oil into the market. And China is likely to reopen. I suggest that oil consumption growth was going to outpace production growth. Supply and demand, I'm bullish on oil. If you aren't already receiving our e-newsletters or digital or print editions of BIC Magazine, I encourage you to go to BICmagazine.com and click the subscribe button near the top of the page. And please follow BIC Magazine on LinkedIn and Twitter. God bless.